only 0.1% of people make it in property investing. If you're serious about building a property portfolio, then make sure you watch till the end and take note. Also, this will help you deep dive through all the misinformation out there. How far you go is up to you. And if you haven't already, make sure you click on the follow button below, and also let me know your problems in the comments you have on your journey, and I'll create a video for you. How much effort will you put in? What are you willing to do to get there will determine how far you go. A little bit about me. I'm Scott Lavoon. I'm the founder of Wealth Through Property. I started investing in property at the age of 30 years old while working a full-time job as a tradie. I wasn't on a big income, and within the space of 3 years with the right mentors, I was able to build a system where I was able to retire with over 10 properties and over 100,000 in passive income. Before you start, sit down and work out your goals. What do you want to achieve and why? Do you want to retire or have freedom in 10 years time with 100,000 in passive income? Then why do you need this amount? Do you need more? Is it even realistic that you can hit your goal? I find most people don't know what's achievable and what's realistic with their own personal circumstances. Yes, you see other people like me achieve these outstanding results, but does that mean you can do this? Property is about 4 main things: finance, lending, location, and leverage. The most important factor is lending, not location, lending. Regardless whether you have a big or small income, if you can get lent, then anything is possible. If you have the wrong lending strategy from the start, then you'll have to stop before you begin. And yes, on a small income, you can still buy as many properties as you want, but there is a way to do this. You're not gonna find this information for free. You need to find a mentor who can teach it to you that actually does it. I'm gonna tell you now, the whole buy a positive cash flow property, it grows in value. You rip the equity and go again. This couldn't be more than wrong. This is not how it works, especially in the current market conditions. Imagine doing a course based on this principle and getting to the realization that you're stuck and you can't move forward unless you wait 20 years. You may have heard these myths and strategies being taught, but why isn't everybody super successful with them? Because it's not the way to do it. Your mortgage broker is not your mentor. Your mentor is someone who has achieved something awesome in property and is willing to teach you the rope. Don't fall into the traps of your professionals saying only worry about lending strategy after the first 1 or 2. These are transactional professionals and you do not want to use them. The lending strategy needs to be done straight away. Fixing a scenario when you're maxed out is expensive, but not impossible. Yes, I know. Your mortgage broker said there is no hope, but there is always a way to move forward. How much deposit do you have to begin with? Can you be disciplined enough to build a deposit? Not everyone has the capacity to build a big deposit. Be careful about entering too early with a small deposit and buying a non-investment grade property because they are cheap. Your strategy needs to be right. Your goals need to be realistic. Don't be tricked into buying these schemes of super cheap properties in whoop whoop. There is a reason these properties are cheap and have never performed. How much risk are you willing to take on? If you're only willing to buy one property every 5 years, then it's going to be a very slow game. Do you have the risk level to buy one property a year or 2 properties a year for the next 5 years? Remember, you're taking on a lot more risk and financial responsibility. You need to be willing to take on a certain amount of risk level if you want to do anything anytime soon. Where is your serviceability and borrowing capacity at? Are you able to take on the debt for 2 properties a year for the next 5 years? Remember to leave yourself room for growth. There will come a time where your income may decrease, your cost of living may increase, or unexpected events may happen. Just remember, there is a difference between serviceability and borrowing capacity. You might have serviceability of only 500,000, which may fluctuate depending on your wage, expenses, rent, debt, and interest rates. But you may have a borrowing capacity of 5 properties at that amount. Then you have short-term and long-term planning. Planning for the next 5 years, planning for the next 10 to 20 years. How are you going to buy the properties? Are you going to do it in your personal name? Are you going to do it in a trust? Are you going to do it in a company or any other type of structure? This is one of the most underrated factors when building a property portfolio and the most important consideration before you start your journey. This could ultimately be the difference between owning 1 or 10 properties. Generally, this can be for tax reasons, asset protection, lending, growth, and strategy. Educate yourself in all aspects of structures. Spend time and money and speak to a mentor, an estate planner, and a wealth management accountant who understands property, tax, and business law. Remember, not all professionals are equal. I can't stress how important it is in your journey to have the right team around you. Stop thinking all information should be free or in Facebook groups. The problem with free information is there is just so much misinformation out there, and you have to pick through all the information to find the information that is right for you. You are only hurting your own journey and limiting the growth. There is nothing better than to educate in yourself and build that knowledge, but the last thing you want to do is take the wrong knowledge because it was free or the professional was cheap. With the right information, you can make educated decisions. And with the right education you get, the less risk something is. How are you going to move from property to property? Can you add an extra 20,000 a year or can you add an extra 60,000 a year? Is the only way for you to move forward leveraging off equity? Or is there another strategy for you to move forward? It's very important to understand the current situation and have an idea of what you can do and what is reasonable. Can you learn the lending strategies to buy so many properties and keep up with your goals and buying strategy? An average mum and dad mortgage broker is not going to be how to help you do this. This information is not easily obtained, and you're not going to get it for free. You need a mentor like me who has done it. This is also the difference between the mentor and professionals you choose and the knowledge you can obtain. Most people stop due to poor lending strategies and not location strategies. We see professionals like mortgage brokers telling people every day the wrong information, like trusts increase serviceability. They say buy in your personal name, then one maxed out move to trust. They simply don't understand the differences between structures. I hope their public indemnity insurance covers them for this bad advice. Trusts have nothing to do with lending, and in fact, you don't even need them for the lending strategies of buying as many properties as you want. Most people get this advice because they refuse to find a mentor who has done it. I'm not sure if a lot of the gurus out there just don't actually understand the differences between a trust and an entity. Disclaimer, seek professional advice around these structures. This is information of general nature and not advice to be taken. All banks are slightly different in the way their policies work. You really need to understand how banks work and the bank's work of liability and risk. Banks would rather deal with a business than people. Businesses produce more money than normal people, plus the limited liability they have, and they make the bank more money. Banks will lend more to a business than they will to an individual, which is funny when you think about a trust. You make a trust and you're the individual trustee. You are still the same person. They're still going to use all your calculations of income, expenses, and personal debt against you. So how does a trust increase serviceability? There is only one way to ever increase serviceability, which is to pay off debt or increase your wage. The banks also see a difference between a person versus a company. Is a company less riskier than a person? The best way is to look at all the bank's lending policies out there. It's really important to quiz your professionals on their experience. I don't just mean business experience, but personal experience also. I'm a firm believer that if someone believes in what they sell, they're going to do what they sell. Otherwise, they are just a sales agent. How big is their personal portfolio? If it's not big or impressive or what you want to achieve, how are they going to help you get there? If they have a large portfolio, how did they get there? Also, how long did it take them to do it? If a professional has taken 20 years to build a 10 property portfolio, it means they most likely don't have the skills to help you build a 10 plus portfolio quickly. Otherwise, they would have done it themselves. Did they do it as a high income earner? Not everyone has the capacity to earn a big income when working their everyday job. It's important to understand your own capacity and have a mentor or professional who can be realistic when helping you. I really hope you enjoyed this guide on how to start when looking to build your team and start your property journey. Please follow, like, share, and comment if you got value, and stay tuned for more.